Role of financial system in economic development of a country. The development of any country depends on the economic growth the country achieves over a period of time. Economic growth deals about investment and production and also the extent of gross domestic product in a country. Only when this grows, the people will experience growth in the form of improved standard of living, namely economic development. The following are the roles of financial system in the economic development of a country. 1. Savings-investment relationship. To attain economic development, a country needs more investment and production. This can happen only when there is a facility for savings. As such, savings are channelized to productive resources in the form of investment. Here, the role of financial institutions is important, since they induce the public to save by offering attractive interest rates. These savings are channelized by lending to various business concerns which are involved in production and distribution. 2. Financial systems helps in growth of capital market. Any business requires two types of capital, namely, fixed capital and working capital. Fixed capital is used for investment in fixed assets, like plant and machinery. While working capital is used for the day-to-day running of business. It is also used for purchase of raw materials and converting them into finished products. Fixed capital is raised through capital market by the issue of debentures and shares. Public and other financial institutions invest in them in order to get a good return with minimized risks. For working capital, we have money market, where short-term loans could be raised by the businessmen through the issue of various credit instruments such as bills, promissory notes, etc. Foreign exchange market enables exporters and importers to receive and raise funds for settling transactions. It also enables banks to borrow from and lend to different types of customers in various foreign currencies. The market also provides opportunities for the banks to invest their short-term idle funds to earn profits. Even governments are benefited as they can meet their foreign exchange requirements through this market. 3. Government securities market. Financial system enables the state and central governments to raise both short-term and long-term funds through the issue of bills and bonds which carry attractive rates of interest along with tax concessions. The budgetary gap is filled only with the help of government securities market. Thus, the capital market, money market along with foreign exchange market and government securities market enable businessmen, industrialists as well as governments to meet their credit requirements. In this way, the development of the economy is ensured by the financial system. 4. Financial system helps in infrastructure and growth. Economic development of any country depends on the infrastructure facility available in the country. In the absence of key industries like coal, power and oil, development of other industries will be hampered. It is here that the financial services play a crucial role by providing funds for the growth of infrastructure industries. Private sector will find it difficult to raise the huge capital needed for setting up infrastructure industries. For a long time, infrastructure industries were started only by the government in India. But now, with the policy of economic liberalization, more private sector industries have come forward to start infrastructure industry. The development banks and the merchant banks help in raising capital for these industries. 5. Financial system helps in development of trade. The financial system helps in the promotion of both domestic and foreign trade. The financial institutions finance traders and the financial market helps in discounting financial instruments such as bills. Foreign trade is promoted due to per-shipment and post-shipment finance by commercial banks. They also issue letter of credit in favor of the importer. Thus, the precious foreign exchange is earned by the country because of the presence of financial system. The best part of the financial system is that the seller or the buyer do not meet each other and the documents are negotiated through the bank. In this manner, the financial system not only helps the traders but also various financial institutions. Some of the capital goods are sold through hire purchase and installment system, both in the domestic and foreign trade. As a result of all these, the growth of the country is speeded up. 6. Employment growth is boosted by financial system. The presence of financial system will generate more employment opportunities in the country. The money market, which is a part of financial system, provides working capital to the businessmen and manufacturers, due to which production increases, resulting in generating more employment opportunities. With competition picking up in various sectors, the service sector such as sales, marketing, advertisement, etc., also pick up, leading to more employment opportunities. Various financial services such as leasing, factoring, merchant banking, etc., will also generate more employment. The growth of trade in the country also induces employment opportunities. Financing by venture capital provides additional opportunities for techno-based industries and employment. 7. Financial system enables venture capital growth. There are various reasons for lack of growth of venture capital companies in India. The economic development of a country will be rapid when more ventures are promoted which require modern technology and venture capital. Venture capital cannot be provided by individual companies as it involves more risks. It is only through financial system, more financial institutions will contribute a part of their investable funds for the promotion of new ventures. Thus, financial system enables the creation of venture capital. 8. Financial system ensures balanced growth. Economic development requires a balanced growth, which means growth in all the sectors simultaneously. Primary sector, secondary sector and tertiary sector require adequate funds for their growth. The financial system in the country will be geared up by the authorities in such a way that the available funds will be distributed to all the sectors in such a manner, that there will be a balanced growth in industries, agriculture and service sectors. 9. Financial system helps in fiscal discipline and control of economy. It is through the financial system that the government can create a congenial business atmosphere so that neither too much of inflation nor depression is experienced. The industries should be given suitable protection through the financial system so that their credit requirements will be met even during the difficult period. The government on its part, can raise adequate resources to meet its financial commitments so that economic development is not hampered. The government can also regulate the financial system through suitable legislation so that unwanted or speculative transactions could be avoided. The growth of black money could also be minimized. 10. Financial system helps in balanced regional development. Through the financial system, backward areas could be developed by providing various concessions or SOPs. This ensures a balanced development throughout the country, and this will mitigate political or any other kind of disturbances in the country. It will also check migration of rural population towards towns and cities. 11. Financial system helps in attracting foreign capital. Financial system promotes capital market. A dynamic capital market is capable of attracting funds both from domestic and abroad. With more capital, investment will expand and this will speed up the economic development of a country. 12. Financial system helps in economic integration. Financial systems of different countries are capable of promoting economic integration. This means that in all those countries, there will be common economic policies, such as common investment, trade, commerce, commercial law, employment legislation, old age pension, transport coordination, etc. We have a standing example of European Common Market which has gone to the extent of creating a common currency, representing several countries in Western Europe. 13. Financial system helps in political stability. The political conditions in all the countries with a developed financial system will be stable. Unstable political environment will not only affect their financial system but also their economic development. 14. Financial system helps in uniform interest rates. The financial system is capable of bringing an uniform interest rate throughout the country, by which, there will be balanced movement of funds between centers, which will ensure availability of capital for all kinds of industries. 15. Financial system helps in electronic development. Due to the development of technology and the introduction of computers in the financial system, the transactions have increased manifold, bringing in changes for the all-round development of the country. The promotion of World Trade Organization has further improved international trade and the financial system in all its member countries.